Hi, good afternoon, guys. Welcome to another post-market report. My name is Ram Dhamija, and today is 26th of December, and today we have Nifty expiry. So I am here to share my thoughts about what happened in the market and how do I see the week ahead going forward. So today was not a very action-packed day. If you see what happened in Nifty, Nifty was in a small range of around 200 points. But as usual, there was some sharp movements on both sides, which at one point in time made the puts go almost 5x. That happened at around 1:30. So the day opened all right, and immediately what we saw was that there was a huge spike on the call side, and Nifty went up to 23,860, and from there it started cooling down. So anyone who had a small stop loss for calls would have got triggered in that action, and then the market kind of drifted down, and the sharp spike on the put side came in at 1:30, wherein all the puts went up 3x, 4x, 5x. It was a very sharp move, which immediately got recovered. But it had all the bearings of hedge funds, and the high frequency fund stamp written all over it, because immediately that candle took the stop losses of the put side and immediately it retraced back. If you look at the open interest, it was an interesting one, because the open interest yesterday at close was about a zero point 0.9, and from there the open interest had started drifting down today, and it had reached 0.7 level during the day. So there was always a pressure on the market on the downside, which was evident with the slow drift of the market going down. Now, where do we go from here? Just one more point before that this sharp move on the put side was so sharp that it took the stop losses of Nifty next week also. So I had certain positions in Nifty next week on both call and put side. The put side position stop loss got triggered in this down move as well. So this move was very sharp even for the next week options. And the same happened in Bank Nifty options also. Now, one might argue that Bank Nifty is almost a month plus away. But even in them, the stop losses got triggered. So this move was slightly sharp, and it had all the stamps, as I said, of high frequency traders written all over it. So this is a period which I have said before is dull for FIIs in terms of investments. That is why you will not probably see market going more than 1 or 2% on an intraday basis. And that is what we have seen since December 20th, which was the final culmination of the downside. After that, the markets have been in a sideways, lethargic kind of a move. So that is likely to continue going into January 1st week, and that is when the real action starts. That is when the volatility will spike up because of the US new government coming in, because of budget talks. There will be news floating around every day of a new proposal coming in, and the markets is going to dance to it. So there is going to be huge volatility in January 1st week onwards. We have to be prepared for that. And then, of course, the Fed meeting is there in Jan end, so that will also contribute to the volatility. Now, how has been this month for me? Personally speaking, this month has been good. I will be ending at 3% plus for the month in terms of my options book, which is quite decent considering that there was a lot of volatility involved. And the key was to take care of the first 15 days and 20th December also, I would say. So first 15-20 days were very rough, and if one was able to survive that, then you get rewarded. So my month, if I count today's expiry as end of the month, though trading days are still left, I will end at 3% plus, which is very satisfying if you ask me. Now coming what is in store for next week. Right now nothing, no major cues. As I said, the Nifty straddle for next week is about 370 points odd, which is just about okay. So it's not too much money, it's not too less money. So I'm expecting this kind of a market to continue for some more time. And on expiry days, we know that such sharp moves come in, and one has to have systems to take care of such sharp moves and not completely, lose out on the day because of such moves. So these moves will keep on coming. We as traders have to navigate, and what we have to ensure is that on good days we make really good money, so that the bad days or the average days get taken care of. So that's it from me today, and I shall see you soon with another video, another update. If you like my content, please subscribe to the channel. Please share it with your friends so that they can also benefit. And I'll see you soon. Thank you so much. Bye.